So the first thing I want to speak about, mistake number one, is using those US-based percentages without adjusting for the UK. Okay, so the first mistake is just taking the percentages straight out the book and running with them. Because whilst they are a great beginning point for us understanding profit first, our systems, our tax system, our banking system, our systems are different to the US. We have a lot in common with the US, but our tax system is actually quite different. And so, for example, what you will see in the Profit First book is you will see 15% of revenue as the suggested amount for most revenue levels to be put to tax. And this is to cover personal tax and corporate tax. But actually, the percentage that you want to allocate to tax depends on the structure of the business, how you are taking money home, and of course, there's VAT, an additional tax that we have to think about as well, and not to mention PAYE taxes too. So we have a different structure, particularly when it comes to tax. And if you're just taking 15% of your revenue, as is suggested in the Profit First book, the likelihood is you actually won't have enough saved in your tax account. Now, it's great. It's a great starting point because it's better to have some saved than nothing at all, but you're not going to be fully covered. So making sure that you understand the nuances of what your tax percentages should be for your specific business based on the structure, based on how you take money home, is really, really important.